Wow. I wish my family members would introduce me like that.
Yeah, no way.
All right. How's everybody doing?
Good.
All right. Who said that?
I should come around the front.
You want me to stand here?
Yeah, in front, that way it's...
All right. How many realtors in here?
Sorry to hear that.
No, I'm just kidding. I love you guys. All right. So, as Josh mentioned, my name is PK Patel. I'm with Midwest Corporate Credit. I'm one of the co-founders. And today I'm going to show you how to five-fold your investing with little-known financial tools. How many of you want to five-fold your businesses?
Oh, yeah.
All right.
How about 10?
You five-fold it first, and then you five-fold it again. It's 25-fold.
Okay, there you go. Yeah. Now we're talking. Let's give Bill Gates a run for his money.
There you go.
Oh, yeah.
All right. So, little background on me. I'm not going to take too much time on this. I know a lot of speakers ramble. They show you pictures of their family, their vacation photos. So, you could check that out on Facebook.
Okay.
All right, so my story. I'm actually a real estate investor by background. I started way back in 2006. I did my first deal probably in December of 2006. Been investing for a very long time. How many of you remember doing short sale flips?
Yeah.
Yeah?
Short sale.
2 HUDs, 1 set of funds. Yeah? I see some heads nodding. So some of you guys remember that. So those days were awesome. Okay, 2006, 2007 were really great years. And then what happened? 2008. So all of that came to a screeching halt. Lenders tightened up their guidelines. There's a lot of things that you couldn't do. There was title seasoning requirements. So all of that actually hindered our business. So all the funding dried up. That's what happened. You guys remember that? So no? So in 2008 is when it all started. That's when all the dominoes started falling. So we were doing short sale flips at the time, and we would negotiate a short sale, and then we would sell the property. And one thing we did that was pretty clever was we wouldn't actually get into the deal unless we had a buyer lined up, and we're able to wholesale it. So we had a definite exit strategy in place when we would do these deals. And then eventually we were forced to hold on to them because of the title seasoning requirement by the end buyer's lender. So it was either hold on to them or the buyer's not going to get their loan, or you need a cash buyer, which there weren't very many back then. So what happened was we ended up holding on to them, but we found all these unconventional ways to fund the deals so that we could hold on to them. Eventually what happened was a lot of our competitors started asking us, hey, how are you holding on to these? Do you have like, an uncle with deep pockets or something? So after about 5th or 6th time getting that question, we said, you know what, there might be something to this. So we became finance consultants, and that's when we started Midwest Corporate Credit in 2011. So a little bit about the company. Like I said, we started in 2011. We've completed about $250 million in financing since inception of the company. We have $3 million in business lines of credit of ourselves, in-house lines. So, and we were also named one of the fastest growing companies by Inc. magazine 3 years in a row. All right, so let's talk about the banker. How many of you like bankers?
I do.
One guy.
Oh, yeah.
All right.
I got them in my back pocket, I load them.
There you go.
They're in the money
All
market.
right, there he is, the banker, right?
Yeah, there you go. Hey.
All right, so how many of you know what desperation cologne is? All right, picture this, all right? Try this experiment. One day, dress up like you're homeless, okay? Go out and beg for money at CTA stands, right? At all the CTA stops. And then at the end of the day, tally up how much money you make. The next day, borrow a $3,000 suit and go up to random people and say, "Excuse me, sir," or "Excuse me, ma'am, I only have a $100 bill. I need a dollar. Can you lend me $1 and see? Watch how many people actually give you the money." Okay, so that's one of the common factors in banking is when you need the money, you're not going to get it. When you don't need the money, every bank is going to compete for your business. All right, so at the end of the day, that guy's not so bad after all. All he's looking for is repayment. Okay, that's all he wants is he wants his money back with the agreed upon interest. So I'm going to show you guys how to get rid of that desperation cologne or desperation perfume. Here's how. So the 3 C's of lending: cash flow, collateral, and credit. Business and personal. Okay? So cash flow is pretty self-explanatory. How much income do you have, or how much income does your business generate? Collateral is pretty self-explanatory. Is what do you have for collateral? In most of you guys' cases, it's going to be real estate. But other assets that could be collateralized are inventory, receivables. How many of you have businesses that are not real estate related as well as your investing business? What kind of business?
Promotional products company.
What's that?
Promotional products company.
Promotional products company. So do you offer terms to clients?
Yes, but I need to do better.
Yeah. So
Because I don't have a big accounts receivable.
right. So but any accounts receivables you have are considered assets that could be borrowed against. Who else?
A construction company.
Okay, construction company. Same.
You can have it all.
You have some amount of receivables, right?
About 300,000.
Well, that's a pretty good amount.
Want to factor somewhere?
So, there you go. All right, credit. I'm going to focus a little bit more on the credit side of it because it's the most misunderstood factor out of the 3.
I've done it.
All right, let's dive into business credit. Why is business credit so important? So, it'll keep debt off your personal credit and your FICO won't be negatively impacted. I'll show you what I mean by that with actual images later on. So obviously lower scores equals higher rates, fees, and more hassles and more paperwork. Long-term financing can be denied if you, how many of you, don't raise your hands, but think about it. How many of you either know or have done this where you run out of funds on your rehab, you start using personal credit cards just so you could get it to completion, and then you have a hard time. It was supposed to be a fix and rent, and then it becomes a fix and flip because now your score has dropped all the way down to 500s because of all that credit card debt. We've seen it time and time again. So I'm going to show you guys how to avoid that mistake. All right, that's not important. So I'm going to show you guys how to get accounts that only report on the business side and not your personal credit. All right, so let's move to the personal side real quick. Some tips to improve your personal credit. You guys get those balance transfer checks every week, right? Citi, Bank of America, yep. So, pay 2 to 3 points, right? So if they're on the personal side, You don't want to use them because I'll show you later on what happens when you use them. Yes, it's cheap money, but it's going to cost you on the credit score side. So when you have the opportunity, get installment accounts over revolving accounts. Major bank cards are better than store cards. So get a Chase or a Citi or a Bank of America card over JCPenney or Macy's. This is a really good one. Pay your credit cards 4 times a month rather than once a month. Yes, and I'll tell you why. Sometimes what will happen is a credit card, let's say for example you have a Citi card and it reports on the 1st of the month. Let's say you pay it off on the 5th of the month. By the time it reports every month, it's showing a really high utilization. So for example, let's say you charge everything on this card, right? You have a $5,000 limit and all your household expenses are being charged on this card. You might have a balance of $4,500 every time it reports. So the credit bureaus think you've actually maxed out the card every single month and they're keeping it maxed out. They can't. They, as in the credit bureaus, are not able to tell that you ever pay it down. So it's like a strobe light. You guys, the strobe, you know, if someone's dancing in a strobe light, you know, it kind of flashes once in a while and, you know, it looks like they're a robot, right? That's pretty much what the credit bureaus see is, you know, they strobe pretty much once a month.
So what happens if you pay multiple times what was it?
So if you pay off your card every month, once a month, by not letting it exceed 25%, it will never report more than 25% leveraged. So instead of making, let's say, a $4,000 payment on a monthly basis, every Friday, just pay $1,000. So just stay between 0 and 1,000, and you'll never have an issue. Pay your bills on time. Duh, okay? That one's obvious, but I would recommend putting all your accounts on auto pay. That way you never miss a payment. All right. Here comes a case study. So I'm going to show you how using personal credit can harm your business. So we had this client, and I'm not picking on this guy. He actually authorized me to use his information. He had a 4-year-old business. He used $30,000 in personal credit cards to fund his receivables, pretty much. He hired us in May of 2017. We coached him on how to pay down specific cards that had balances on them in a strategic way to gain maximum gains on his FICO score. And I'm going to show you at the end how his credit score jumped by 120 points in 2 months. All right, so here's his report from May 5th, 2017. I know it's hard to see because it's on a projector, but just look at the bottom numbers. He had a 684, 695, and a 697. And here's the after image. It's from July 5th of 2017, and he was at 804, 814, and 820. Here's a comparison. I'd say side by side, but it's actually top to bottom. So 120 point gain within 60 days. So the 3 unconventional financing tools is unsecured business credit, real estate acquisition line, and rental portfolio financing. So what is unsecured business credit? They're lines of credit that are established under your EIN that don't report to your personal credit. There's no collateral required because they're unsecured. And they're revolving, so you can continue using them for years to come. And there's no restriction on use, so they're not Home Depot cards or Menards or HP or Dell or anything like that. In my opinion, unless those are vendors that you legitimately use in your business operation, those cards are completely garbage. And I'm going to show you how most accounts will come with 0% intro rates for 6 to 12 months. And I'm going to go into the business credit bureaus a little bit. So Experian actually plays a key role on the business side as well. They have a business division. It's got basic information. It's only about 2 pages long. Very simple report. The scoring goes from 0 to 100. 80 is considered good. You guys don't have to know this. This is just extra value addition. I'm not going to spend too much time on it. What this report shows is trade line type, amount, and balances. All right, the next one is commercial Equifax. So commercial Equifax is the one that you guys need to focus on because in small business banking, it's the most widely used. So we call it the 800-pound gorilla. All right, so it's got more in-depth information. Your gross sales, historic payment history, who the owners and guarantors of the accounts are. And there's 2 different scores. There's a credit risk score and a business failure risk score. So all these algorithms, that part is not important. Just making sure that nothing negative shows up on your commercial Equifax report is important. All right, and then there's this bad boy, Dun & Bradstreet. Some of you know about Dun & Bradstreet. When it comes to small business banking, it is completely useless. Nobody checks it. So what is Dun & Bradstreet good for? So it's good for getting government contracts. A lot of times if there's 2 bids on a government project and one has a superior DNB profile, they're a little more inclined to go with that one because they can execute. And they have a history of executing. All right, and it's good for business-to-business credit. So your Home Depot, your Dell, your Shell, BP, cards like that, if you need them. All right, they go off what's called a Paydex score, 0 to 100, 0 being bad, 100 being good. And they have a self-reporting option, which means you can pay them to report all the accounts that you've had before you actually created a DUNS profile. So it's, on their end, it's basically just a money machine, and it's extremely expensive to get that. And it's rarely used in small business banking. So let's say you walk into, let's go with Chase, since they dominate this market. You walk into JP Morgan Chase, they're not going to check your Dun & Bradstreet profile. Okay, so for real estate investors, it's pretty much pointless. What the banks don't want you to know. What they don't want you to know is which accounts are reported where. They don't even tell their bankers that. I talk to a lot of high-level commercial bankers. I mean, guys that have $10 million a quarter in quotas that don't know where these accounts are going to report. They don't want you to know that you could get a perpetual 0% balance transfer. So it's a financing hack that we found that I'm going to share with you later on. So the other thing that is not widely known are bank designations. So there's banks that are specifically commercial banks, there's retail banks, and there's banks that specialize in mortgages. So you have to know who's who, and with thousands of banks, you have to be able to sort that data, and it's not something that's widely known. All right, so the line of credit program, what we do is we set up business, Visa and MasterCard, and checkbook lines up to $50,000 per lender for qualified candidates. So all kinds of companies would qualify, including real estate investors. Startups are welcome. What can the lines be used for? Startup or working capital, marketing, travel, whatever you want. Rehab portion of your projects, education and real estate, and possibly for acquisition. Here's a sample balance transfer check. And the reason this is important is because I'm going to show you a deal that I did using this type of financing where I only paid 2% interest per year. So this is a recent check that I received. This account has $75,000 limit. It says you get a 0% promotional APR through September of 2019. So some of you guys are probably familiar with these types of checks. You get them on the personal side. You also get them on the business end. I'm going to talk about this deal that I did. Here's some before and after pictures of the curb shot. Here's some after pictures, purely for your enjoyment. So we ended up selling this property for $268,000. Our all-in cost was about $200,000. And the way we financed it was we used about 6 or 7 accounts with balance transfer check, just like the one I showed you. And we stacked them on top of each other. And we basically got all of that financing for 2%. So $68,000 in gross profit using unsecured line of credit program. If we had borrowed hard money or private money, we would have only made about $50,000. Who wants an extra $18,000? All right. The rest of you don't? Yeah, see me after this.
How about a short stick in the eye?
All right, the next product I'm going to talk to you about is a real estate acquisition line. So some of you guys are, I could see the faces, you know, I could read your body language, like, okay, one deal, you know, you had to stack 5 balance transfer checks to get 2%. What if I want to move faster than that and I want to do 10 deals? This is it. Okay, so we'll set you up with a real estate acquisition line, and we will 5-fold your liquidity. So if you have $100,000, you'll get up to $500,000. If you have $200,000, you could get $1 million line of credit. All right, so interest rate is locked in. Rapid fire acquisition. Remember that, that's very important. I'm gonna give you an example of a client that went from 9 rental properties to over 80 in about 7 to 8 month period. And we'll get you a pre-approval in minutes. Line amounts from $350,000 to $10 million. If you have a question, if you could write it down, I'll do a Q&A session afterwards. All right, so what do you need? You need a 680 credit score. You need to have completed at least 3 deals in the last 24 months. And you need a minimum of $50,000 liquidity. And here's the case study. So, it's a client named Sam. I want to talk to you about this, this particular client. He likes to be private. He told me not to use his last name. He told me not to tell anybody which area he invests in. He wants to remain completely private. I'm actually surprised that he let me even use this. All right, so he started off with our business credit program. 12 months ago. He had 9 rentals 8 months ago. We set him up with a real estate line of credit for $850,000 8 months ago. And then this guy just went trigger happy. Every week he would come to us with 2 contracts like, oh, you know, I got this, I got this. We ended up using his line to fund them all. And then we set up subsequent financing for long term. So a 30-year fixed note that would get him out and replenish his line. And he just kept doing that. He kept repeating it. And next thing you know, he's at over 80 rentals today. And we started off with him back in August with this particular product. So it's extremely powerful. So application process, you guys have the half-page application. Those are just to gather information. We'll give you guys a no obligation consultation once we get those back. All right, we'll assign somebody that'll work specifically with you. There's a lot of documents that go into setting this line up, and we'll walk you through all of it. So once it's set up, you're free to acquire as many properties as you want up to that line amount. All right, and then we'll go to work and get you the capital you need. All right. Now I'm going to take questions. You had a question, right?
Yeah, for the, you had mentioned, excuse me, the acquisition line. And I guess you need a minimum of 50 liquid. Does that 50, how long does that have to be seasoned? And does it need to stay in the bank until you get the line, or what's the criteria for that?
So his question was the $50,000 minimum liquidity. How long does it have to be seasoned? So how long do you have to show paper trail or possession of it? The answer is minimum of 2 months. Minimum of 2 months, unless you refinance one of your current investments and there's a track record of where it came from. Yes, sir.
In this example, you say he has $850,000 line of credit, and let's say he brought you 10 properties for $85,000. Would he have to come up with any cash out of his pocket somehow to finance part of this, or is it 100% financing?
All right, so his question is, if this gentleman wants to acquire a property using his real estate line of credit, does he have to come to the table with the down payment? The answer is yes. It's 90% LTV and then 95% of the rehab. So that's where the liquidity portion comes in. So basically what happens is, instead of doing 1 property at a time, now you could do 5 at a time, provided that your risk tolerance will allow you to leverage that much. If not, then even 2 or 3 at a time. Yes?
And to that point, when you're buying properties and you have this line of credit, does whomever that's supplying the credit require appraisals, and the appraisals have to net out what the after value repair is?
The answer is there an appraisal required? The answer is yes. The only thing you need to close is appraisal and title once your line is set up. Everything else is, they've already done their due diligence. So appraisal and title, and yes, it does have to appraise out, because when they're lending that kind of money, they have to make sure their risk management is in place as well.
And sorry, what's the fee for Midwest Corporate Credit?
What's the fee?
Yeah, what do you charge?
So that depends. Yeah, that depends on your particular situation.
So what are your fees range?
Okay. So
0.5% to 10%, or what are we talking here?
So our fees on this particular product will range from The lowest I've seen is about 2,500. The highest I've seen is about 30 grand. And that was for a pretty big line. Yes, sir.
What is the interest rate on this line?
The interest rate will range from 6.99 to 8.99. Any other questions? Yes, sir.
PK, do you put those in a corp, you know, with a PG, personal guarantee? Is that how you structure that?
There's PG and no PG options available. So the non-personally guaranteed options, the ARV is going to be a little bit lower because you're not personally guaranteed. If anything happens, you could just throw your hands up in the air and walk away, and the lender is assuming all the risk. Therefore, they're going to lend you a little bit lower percentage of what the property value is. The PG options is definitely 90% and 95% for the rehab.
Do you help build somebody up, you know, with the personal guarantee in the corp? You know, to get them a higher line?
What's that?
Do you help somebody, you know, do you help build up somebody's personal position, you know, so they can guarantee the corp, so they'll get a higher position? Higher line of credit?
So typically, we won't do that. You have to be legitimate joint venture partners in order for, so that person has to be on the LLC or the corp as a partner.
Good.
What if you wasn't doing real estate and your business was something else that you need to use the line for?
So the first product that I talked about, the unsecured business credit, that's what it's for. So if you're not doing real estate, as a matter of fact, about 50% of the companies that we consult with are non-real estate related. So chiropractors, printing companies, sometimes contractors, energy drink companies. So we have products for all types of businesses. I'm only talking about the ones that relate to real estate, since that's what you guys do. What type of business do you have?
I am a real estate investor, but then we also do furniture. We retail furniture provider. So
Okay, so
it kind of like work hand in hand, you know. When you buy a home, you need furniture, so I thought about doing something with furniture. I have history in the business.
Got it. So retail furniture?
Retail furniture, yes.
all right. So she asked if she's a furniture retailer as well as a real estate investor, and she asked if we have anything that's available for them. The answer is yes. Yes, sir.
For the business line of credit, what's the fee for that?
For the business line of credit,
Go first, right?
the first product will charge a setup fee of 10% once you have the funds available.
Could that amount be rolled into the line of credit so you just don't pay it like upfront?
Can that amount be rolled into the line of credit? Yeah, and as a matter of fact, it comes out from the line once it's set up. So it's a true back-end fee. You don't have to pay anything up front. Yes, sir.
In the case of possible, if ever default on the unsecured lines of credit, do the companies come after the personal guarantor or the LLC or the holdings of the LLC has?
So he asked what happens in the event of a default on the unsecured lines, right? So in the event of a default, they're going to try to collect from the LLC or corp first, and then they're going to revert to the personal guarantor. So yeah, there is a personal guarantee. So if there is a default, they are going to expect the personal guarantor to make it right. Any other questions? Yes, sir.
Is there an advantage over having a particular type of business, LLC versus S Corp versus limited? Is there any preference?
He asked if the type of entity that you have has any bearing or gives you an advantage. The answer is no. You could have any type of entity that you want.
The persons you described whose credit jumped the 120 points, what service was that you provided and how did you do that?
So she asked the case study that I mentioned where the gentleman's credit jumped by 120 points in 60 days. What service was that we provided? That was basically a lookover, like a pre-underwriting service that we provided before we put them through funding. So what we'll do is we'll look everything over and make sure that it's ready to go in front of an underwriter. So we present the client in the best possible light when it gets on to the underwriter's desk. So it gives you the highest chance of being successful in getting that loan request approved. Yes, sir.
Have you ever funded an LC3?
Have we ever funded a what?
LL3C or LC3, the new types of corporation, like it's a low profit limited liability company?
We have not. We don't get very many of those. Yes, sir.
And to the point about the case study, was there a fee to look over his credit, and then was there some particular process? You said you paid down his card strategically, so you targeted, I'm guessing, the DTI or credit exposure. Can you expand on that?
So his question is, did we charge the client when we helped him raise his credit score? The answer is no. We don't charge for credit review. If we don't think that we could get something done, we'll be upfront. And if we think that we could tweak something, make some adjustments, we'll let the client know. And if they follow our instructions, those will be the results. If they don't, then, inverse will be the results. So that gentleman just happened to follow our recommendation.
I have another question.
Yes.
If you have business credit cards already, right, and they're kind of like 90% maxed, would that be something that would negatively impact your ability to get the funding for business?
So her question is, if your existing business cards are 90% leveraged, would that help or hurt your future round of funding to get additional lines of credit? The answer is, it depends on how your payments have been made. So in order to give you an accurate answer, we'd have to take a look at your your credit card statements and see what's going on. If they've been cycling up and down, then the answer is it would help. If they've been, if only minimum payment is being made, then that would likely hurt. Yes, sir.
How long does a company have to be open? And can you acquire a company that is been seasoned already?
So he asked if there's a requirement on how long a company has to be open, and if you can acquire like a shelf corp, right? That's the terminology. So we don't recommend shelf corps. We recommend just starting off with a brand new company and establishing it yourself. The seasoning is important, yes, but we can work with startups as well. So anytime there's a shelf corp and the underwriter catches it, it's an immediate decline. In banking, they just don't like any smoke and mirrors, and that's what shelf corps are considered. I know there's a lot of websites online that sell some of these seasoned corps and stuff like that. You may be able to get away with it to build a DNB profile, but on the banking side, we highly recommend staying away from shelf corps and just saving your money. Yes, sir.
So what are some of the requirements to get business funding without requiring a personal guarantee? What type of position do you have to be in?
So business credit from the consulting that we do, there's no such thing. You have to be, you have to have a personal guarantee, because these are going to be actual cash lines. If you want vendor lines, that's different. You're able to get those, the Home Depot cards, the HP, the Shell, things like that, the gas cards. If you want that, then you're able to get those without a personal guarantee. Or If you've done enough deals, you could get the real estate acquisition line of credit without a personal guarantee. You had a question? Oh. Yes, sir.
I don't know if you answered this question, but what was the age of the company that you're going to start
I don't understand the question.
how old does a company have to be to get financing, like as a startup?
So, you could have a company that you put together last week.
Okay.
Yeah.
I mean, your underwriters would seriously consider that, though?
Yeah, because it's based on your personal credit. So the way it works is on the unsecured side, you're gonna, when it gets in front of the underwriter, they're going to assume that you're gonna manage your business finances the same way you manage your personal finances. So it's very indicative. That's why, remember, cash, credit, collateral? You need at least one. So on the unsecured side, you don't have collateral, you don't have cash flow just yet, so they underwrite your personal credit.
As a guarantee?
Correct.
Okay.
Yes.
So you had mentioned about the Dun and Bradstreet number and how that's really useless, which is disappointing. But do you also, does your company help the companies you get credit with the Equifax and the Experian, get them numbers?
So those are already going to be there. Those are based off your EIN. Dun and Bradstreet is the only bureau that has their own way of indexing companies.
Right.
So if you want a Equifax commercial report, for example, all you need is your EIN. They don't have a special number. Just like your social security number. If you wanted to pull your own personal credit, it's just based off your social security number, and there's no extra step in setting anything up. Yes, sir.
So yesterday I started a corporation. What should I do to build credit? What kind of lot? What do they put on the trade line? I mean, I got the EIN number yesterday. Go tomorrow to open the bank account, put money in there. What should I be?
So,
besides paying the bills on time and all that, I'm talking.
So it depends on what your goal is. If you want to raise cash lines of credit that you can use for rehabbing and business operation expenses, then you need to see one of the guys back there at that table. Fill out that card, and we could talk to you more in detail about your particular situation.
I filled it out already.
Okay. See, you're one step ahead. All right. Yes, sir.
And my question to you again, is these lines of credit going on your EIN number or your social?
Everything that I mentioned is going to go under your EIN, unless you default on it. If you default on it and not pay the account back, then they're likely going to hurt your personal credit. Yes, sir.
So yeah, like that, what happens is you can have somebody else be the guarantor, and then you're at zero EIN, and you can work together with that. But they have to be on the business, right? So the personal guarantee.
Yeah, so if you have a partner and their paid-in equity is to be a personal guarantor on some unsecured lines, absolutely. We've had...
That's the social security number would go on because it is combined with that.
Correct. They would still be completely separate.
And does it pay to be part of the Equifax or the commercial, so it's kind of like how Dun & Bradstreet does. Would it pay, they have their own programs that you can pay for, I'm sure. Does it pay to be part of those plus monitoring or those programs through Equifax?
So his question is, does it help your credit standing if you sign up for Equifax's credit monitoring? The answer is no. What's being reported, Dun & Bradstreet is the only one that does that. There's certain things that I can't say here about Dun & Bradstreet, okay? In order to be a professional, I'm not going to say them, but commercial Equifax and corporate Experian are not like that. You could sign up for the monitoring, and that's only for your own benefit.
So with my business credit cards, and if I wanted to view what kind of rating I have, I would have to go to Equifax Commercial and put in my EIN number, just like I would my social, if I'm gonna look at my Experian, Equifax, and TransUnion Personal.
So she asked how you would check your commercial Equifax report. So it's almost exactly the same as pulling your personal Equifax report. All you need is the EIN number, the city and state where you're located, and most likely they'll have it archived and they'll ask you, like, is this you, with your complete address. And if it is, then you'd go ahead and pull that report. They're not cheap, so none of these reports are cheap. Expect to pay between $200 and $300 depending on, yeah. So, I know corporate Experian, you could sign up for their monitoring where they'll give you a monthly update and they'll give you one report a month and it's about $120 a year. So that one's a little more reasonable, but it's not as widely used in the industry, so keep that in mind. Correct. All right, we're getting a lot of questions. Yes, sir.
Okay, I'm almost positive I shouldn't say this, but I'm sure you have clients, brand new clients that come that have authorized users on, a couple different bureaus, authorized users. If you want to explain that to people about authorized users. Okay, there we go. Well,
all right.
Good question though, right?
So, a bank or a finance consultant, you don't want to use that word. We don't want to hear it. So, I'm just messing around. I'm not trying to disrespect you or anything like that. But you threw out a disclosure.
I haven't seen him in 3 years. Me and him went out to lunch like 3 years ago. I swear, he's a good guy.
All right, I'll give you your bribe later. So, he asked about authorized users, and it's a great question. I know sometimes when people go through a tough time or they don't have credit, so they either have bad credit or no credit, they want to build it back up and they want to do it quick. So a lot of times what they'll do is they'll buy trade lines, and they're called authorized user accounts. If you're putting them on your credit report purposely and you're paying for them, that's not something that we recommend. If they're legitimate authorized user accounts, let's say a kid goes off to college and a parent lets them use a Discover card that the parent had since 1987. Now I've seen this happen. The kid was born in 1985 and he had a Discover that was reporting since 1987. So we know banks are inefficient sometimes, but they're not that inefficient, right? So he didn't get it when he was 2 years old. It turned out it was an authorized user account that belonged to his dad. So if it's a legitimate circumstance, that's fine, but a lot of times the banks will actually take those out of the algorithm when they underwrite the app. So, but yeah, purchasing authorized user accounts is not a practice that we recommend. In the long run, what happens if that account that you purchased, now that person runs into a hard time and defaults on their debt? So it's going to screw up your credit. So just keep that in mind if you're purposely adding authorized user accounts. I highly recommend stay away from it. All right. We got some great questions. This is a smart crowd. I like it. Yes, ma'am.
You mentioned the business credit has a 10% fee. Is that always 10% or is that just some types of business credit?
So she has a question about the 10% fee. So it's a one-time setup fee that we charge on the unsecured business capital once you have it. So what we'll do is we'll bill you with net 7 or net 15 terms after your account's already established and you have the funds available. The real estate line of credit, that's a different product. That does not that doesn't apply to the real estate line of credit. All right, any other questions? Yes?
Now, the business line of credit now, what vendors do you go out to find these lines of credit for the consumers?
So his question is, what lenders do we go out to in order to get these unsecured lines of credit established? It depends. So what does it depend on? Over the last 7 years, we've done a lot of data mining, and we've had about 4,000 clients go through our program. So based on all the data that we've received, we know exactly who's inquiry sensitive, where they pull from, and where they report. So based on what state you're in, heck, sometimes depending on what zip code you're in, we'll use Chase as an example again. Chase may pull from Equifax if you're in the south side of Chicago, and they may pull from TransUnion if you're in the north side. We've seen it happen. So we have inquiry patterns mapped out of every single lender out there, and depending on what we see on your particular credit profile, our software will map it, and the software will choose which lenders it should go to. Does that make sense? Follow-up question? Yes.
How long does the funding take?
So he asked, how long does the funding take? The unsecured business lines, we could set them up in as little as 15 days. It could take as much as 40 days depending on how backed up we are and how backed up underwriting is for certain lenders. The real estate line of credit takes 3 weeks. Yes?
There are a lot of companies out now offering similar programs. How do you distinguish your company and what makes you all better than some of these other ones?
Oh, it depends on who you're talking about.
Fund and grow.
Fund and grow.
Right.
Okay, so it's very similar. It just depends on who's got the most data, and there's no way to know that. And the reason for that is the sample size is always going to be 1. You can't pick both of us as consultants, right? You could either, you pick me or you pick Ari, right? If you go through both, then the whole thing's gonna bomb.
Absolutely.
So, for that reason, they have their way, we have our way.
Who's the best way?
What's the best way? Nice try.
Good answer.
Yeah. So, anybody else that's working for a competitor, I'm just kidding, messing with you. Any other questions? Yes?
Another question now for the business line of credit. Let's say that you got approved for $100,000 now. With the business line of credit now, can you receive that on one card, or do you have to receive it on multiple cards?
His question is, let's say you get approved for $100,000 in unsecured business lines. Is that going to be on one card or multiple cards? It's going to be on multiple cards, especially if your business is new. We do have businesses that get it all in one lump sum. We have businesses that get $200,000 all in one lump sum, but then the other factors are going to come into play. The cash flow, potentially collateral. So if you're only going credit-based, they are going to cap out at around $50,000 when you're new. And of course, you could increase them. All of mine, I've been doing this for about 7 years, and all of mine are above $50,000. So I showed you a deal that I funded using just business credit cards. So when you're new, you got to kind of take what you could get and then build up your Equifax commercial profile. When that's built up, then you're going to get higher and higher lines. And it's a process. It's a long-term process. But if you put it into place, I guarantee it'll be worth it. Yes, sir.
Getting these high limits. So say I get $100,000 today, and I buy small deals, $50,000 in 1 year. I use it. what is usually, can I lose it? So if my 100,000 is today, how long can that be reduced down, and how is that process usually seen and if it gets reduced? Does that make sense?
Are you talking about the unsecured business credit or the real estate line of credit?
Just say the line of credit. I
What-
don't fully utilize it. Say if I only utilize $50,000 of it, when can the banks come back, and how often do you see banks come back and reducing the line since you're not fully utilizing it?
Okay, so you're talking about the unsecured business credit. All right, so I have seen banks reduce it after 3 years of inactivity. So if you let it sit idle and not use it, as long as there's activity, you'll be fine. And then we'll also show you how to cycle it so that you could not only keep it, but grow it and potentially double it in the next 12 to 24 months. Maybe, we've had clients that have quadruple lines within a 2-year period. All right, any other questions? All right. This has been an awesome session. Thank you guys for participating. Like I said earlier, I'm not a big fan of just talking at people. I like to be interactive, and you guys did a great job asking questions.